Guys, doing here once again from DRFX Forex Swing Trading, providing you with another update on the trading opportunity on the New Zealand Canadian dollar that I looked at in the previous video. Now, just a quick reminder that we're basically in a situation in which the market has been moving sideways, which eventually created this range pattern that we're now seeing on the daily chart. Trading within this pattern is possible and has been possible over the last couple of moves that have taken place on this pair the last couple of days. So I'm looking at another trading opportunity that could present itself at this resistance with a look to trade it back down to support. Now, on the 4-hour chart, we're starting to see signs of that movement beginning to take place. Right now, we have created this bearish signal, which started with these tweezer tops, followed by this strong bearish U-turn that created a formation known as a bearish engulfing candlestick formation or an evening star. So this is looking at the first sign that the market is going to be headed back toward the support boundary. However, in terms of a signal to trade, this, as strong as this signal is and as strong as this U-turn is, it is not enough to start trading. The reason for this is that the break below this trend line and the resistance boundary is not far enough. So that is one of the key elements when it comes to trading candlestick signals that are breaking barriers. The break of the barrier with that candlestick signal has to be large enough to justify entry. If not, then the market is gonna stall, move sideways, or even reverse. So the best thing to do in these scenarios is to wait for the market to produce another strong signal to indicate that we're actually going to be starting to move back to support. One of those signals could come in the form of a popular formation known as the bear crown or head and shoulders pattern. Here we can see a typical example of how that of this type of formation. The left tip or the left shoulder is formed just inside or within the existing trend, with the center tip or head of the formation just at the beginning of the trend change above the trend line. This is then followed by a break of the trend line, which leads to the formation of the right tip or the right shoulder of that formation, and is then followed by a signal to indicate the start of the move in the trend direction. So that is what we could actually see happen on this pair right now, or next, or within a day or two. The market could come down a little bit before pulling back to test the resistance boundary and then provide a signal that creates a U-turn that starts to move back down to support. So this is what we could actually have on this chart. The left tip formed here, followed by the center tip, and we now need a right tip in the form of maybe a counter trend line break or a small consolidation, followed by a strong breakout signal that leads to the move back to support. Another opportunity or another way in which the market could provide us with a signal is that of a simple ABC setup. Now, this is one of the many type of candlestick formations that you would see across the currency market that leads to strong and sharp movements. Here we see an example of several of the candlestick formations that you will see across the currency market that lead to strong moves. The ABC signal is one of those moves, and when formed and is strong enough, it usually leads to sharp breakouts. So the A is normally formed with an initial movement bearish, followed by a pullback to form the B. Well, actually, the C should be actually here, so a little bit of an error on my part in this document. So the C will be formed by a pullback that almost comes halfway between the distance of the A and the B, followed by a U-turn that creates the signal to start the move. So that is what we could actually see here in this pattern here, which basically would be similar to what we would see here in the formation of the right tip. So the A would be at this area here. The B could be well, straighter, so to speak, followed by a pullback that comes back to the resistance boundary and then provides us with a strong bear candle signal complete the formation, and start the move bearish. So that is what we could see as the two alternative formations, alternative setups that lead to the move that continues, that heads back to support. So assuming that the signal, whichever one it is, closes at this area here, 84.19, then a move back down to support would probably provide a profit of about 100 pips. So that is looking like the trading opportunity in terms of profit to be able to capture from this trading opportunity. So once we get a setup, either an ABC or head and shoulders bear crown formation, then we could take advantage of this as long as the signal is strong enough. So based on the patterns that we're looking at and the time of the day, this is definitely not going to appear for now today. So we're looking at probably the start of the UK session tomorrow morning for early signs of what that potential setup will be. So between the start of the UK session and the end of the US trading session at 12 Eastern, we're going to be looking for signs of a setup and a signal. So until then, take care.